Hey everybody, it's Monday, August 15th, 2022. Thank you for joining me. We've got a lot of economic data to get into today, economic financial news. Let's start with just a little bit about where I'm at. This is my backyard. I don't do many outdoor videos. Some of you say you like them. Others say you like seeing the articles and the charts and stuff like that. So I'm going to try to mix it up. Today's going to be outdoors. And very unusual weather here today in California. Very humid, up to 80% humidity today. And I haven't felt humidity like this in a very long time. This reminds me of being down in Georgia or Florida. Maybe not quite that bad. I think it gets in the 90+% down there in those southern states. But it's definitely unusual here for California. And one of the things out here out west, Arizona, California, one of the things that we often say is that it's a dry heat. So it gets up to 90, 95, 100, but it's okay because it's a dry heat. Well, it's not a dry heat. It's very hot, humid, and actually just sweating, just sitting around today, not doing very much at all. And just unusual. But hey, we'll take it. And no fires yet. Happy about that. And let's get into the news. Stock market's looking in the green, looking strong. Even though with negative financial news coming out today, a few things. Home builders say U.S. is in a housing recession. A housing recession, and I've got the article right here. The National Association of Home Builders, their sentiment turns negative. They have houses sitting on the market longer. They have a record number of unfinished homes that were delayed because of all the supply chain shortages and disruptions. They have a record number of homes that they're seeing in their pipeline, and they know that there may not be buyers out there with the higher mortgage rates, and Americans are going into so much debt. People are actually afraid to buy a home right now. Some people still are, and these people must have a lot of confidence or a lot of money on the sidelines or both, because buying a home right now would definitely be, in my opinion, risky. If you have enough money and you can weather the downturn. And that's what people ask me a lot of times. Should I buy a house now? Should I wait? It depends. There's no clear answer for that. So will you be okay if you buy a home and your home price drops by 10, 20, 30, 40, 50%? Who knows how deep this is going to go? If you find a house that you just love and it's perfect for you, then maybe it won't matter so much. You won't care so much, and it won't matter to you so much because you have a house that you love and you're enjoying the house to your fullest. So if the price declines, it's just a paper loss. And then eventually, once they lower mortgage rates and once they do the bailouts or whatever they're going to do, maybe the home price will go back up after this housing recession that we're in right now. And it's not me saying that. It's the U.S. National Home Builders Association is saying that. So if you buy a home and you love it, it's going to be worth it. And if you're not stressing out living paycheck to paycheck to pay for the home, or if you're not ending up house poor, then that's a good decision, and that's something you can do. Myself right now, I choose not to look to move up to a better house right now because San Diego prices are still insane. Prices have just begun to crack here in San Diego. All right, so that's a question that I get asked very often. On the other hand, if you buy a home, you don't really love it, it's okay, and the only reason you're buying it is because it recently fell into your price range or what you perceive to be your price range. So you're extending yourself to the fullest to be able to get into that home, even though it's not your ideal home or it may not be even close to what you're looking for. You're just buying just to buy. You might want to double think that, or think twice about that. Because if you're in a home that's not going to be a great place for you and your family, and you're going to be stressed out financially and stretched out to the max making that monthly payment, um, think twice about that. And if you're someone that's paying cash, you don't have a payment, then you shouldn't even be worried about that in the first place. Interesting though, the markets, how strong they were today. We have another piece of bad economic data, and this one comes out of New York. This is the Empire State Manufacturers Survey. It declined sharply in August, right? So why are the people that are on the front lines, the home builders, the groups that look at these things, the CEOs, why are they negative on the economy? Why are they being cautious? When we're told that unemployment is near a 50-year low, we shouldn't have anything to worry about. All we have to do is just look a couple places we see the narrative doesn't add up, right? So what's being pushed out there that the stock market is doing good, and you think it's a coincidence that the stock market is going up right now with all this other bad economic news happening, right? This is a market. The stock market is a market that can be manipulated via pushing buttons and pushing digital currency into different areas, into different stocks, ETFs, you name it. They're still monetizing the debt. When I say they, I'm talking about the money guys, the ones with the printing press, monetizing the debt. What are they doing with that? They're buying corporate debt. They're buying bonds. They're buying bundles of loans and securities to take them off the books of the banks. Therefore, the banks can still loan out money. Yes, mortgage rates are higher, so people are having a more difficult time qualifying for a bigger mortgage. But banks are still lending, and with the money guys back there propping this whole thing up, this could be a very slow housing downturn. We'll have to see, but I continue to say it's not going to be a crash. There's different people that disagree with me. They say there is a crash. And what's happened so far in some cities, you see a 1% correction, a 5% correction. If you want to call that a crash, maybe that's a crash to you. If that's in your dictionary, then go ahead. To me, I don't call 1% or 2% decline in home prices a crash. Something like 50%, 60%, I would call that a crash. But it depends on how long it takes. If it takes 2 years to go down 50%, I wouldn't call that a crash. I would call that a severe correction. But to each his own. If you want to call 1% drop a crash, then I'm wrong. Okay, 1% is a crash. But after home prices doubled, tripled in some areas, is 1% that big of a deal to see a 1% drop? I think to most of you out there, the answer would be no to that. But there's still a couple people. I know I shouldn't spend so much time just on one or two clowns, down in comments that, want to say I'm wrong. 99% of you, and I see it in the thumbs up ratio, 99% of you know exactly what's going on. And you're going to be prepared to take advantage of these buying opportunities. That's why I say hold cash. The long-term play is silver. Silver, that's what I'm buying right now most heavily is silver. We saw a big drop in the silver price. Could it go down even more? Absolutely. That's why I would never back up the truck and just put everything into that asset, because if it goes down more, you always want to have some cash on the side. Always have cash on the side. Just when a price goes down, you think it can't go any lower, it goes lower. That even happened to housing. Many people bought 2009, 2010, and they thought that was the bottom. It actually bottomed late 2011, 2012 here in California. 2013, prices started going up again, probably late 2012. So here we are about 10 years later into this housing bull market, and debt levels exploding. Isn't it interesting that with all the debt we have as a country, that the citizens, us, consumers, maybe not you and I individually, but as a group, Americans are in the most debt we've ever been in. So we have the world's largest debtor nation, the United States of America. You would think that with that level of debt, 30 plus trillion, 180 plus trillion unfunded liabilities, you would think that we would be the wealthiest people in the world. Well, a select few are the wealthiest people in the world, but they're at the very top, and the bottom 90%, even people in the 80% income tier or wealth tier, a lot of them are carrying debt. And there was a report that came out a few months ago that people making $250,000 a year, a portion of them are living paycheck to paycheck, because the more you make, then the bigger your lifestyle is going to be. And that's just the way it is. People want to show off. That's the kind of society that we're in. People want to show off. They want to look rich. They want to have the nicest, newest car. And that's why we see these debt levels explode. And even though people are in deep, deep levels of debt right now, they continue to spend. And there was a recent article out here about this. CNBC article today, personalized coffees and prestige skincare. Consumers snap up premium products despite the cost of living. So people are still going out. They're still getting the $4, $5 lattes, $6 lattes. And the consumer skincare products, the makeup, all the things that people don't have to have, but they want to look pretty, right? We're in debt, but we're looking pretty doing it, right? That seems to be the American motto. So if you want to prepare for this, stay out of debt. Buying opportunities are ahead. I continue to stack silver. Link down below, ST Bullion. That's where I get my silver. That's the number one thing I'm buying right now. And I'm not giving advice, but if you want to know what I'm doing, I often get that question. That's what I'm doing. But still stacking, still holding cash waiting for a downturn, a correction for buying opportunities. It's only going to be a few people that benefit from this. I shouldn't say a few people, a small percentage of the population will benefit from this upcoming downturn because so many people are in debt. For example, when home prices go down, if your credit cards are maxed out, good luck getting any sort of loan. You're not going to be able to take advantage of the housing downturn when it gets here because your credit's going to be dinged up, your debt levels are going to be skyrocketing, you're going to qualify for a mortgage. So unless you're a cash buyer, you're going to have a hard time taking advantage of what's coming. So keep stacking, everybody. As you can see, I'm just out here in my generic backyard with a bunch of bushes growing in the background that I haven't really trimmed. And I'm not trying to show off for anybody. My newest vehicle is 6 years old, and I'm just waiting to try to navigate this. And hopefully you guys are doing the same. Thank you for supporting this channel. Really appreciate everybody being here. Bye for now. Keep stacking. Big love, everybody. Peace.